It's Wednesday, November 18th, and the Dow and S&P are up slightly while the Nasdaq is down slightly as of 10:30 a.m. I'm Katherine Ross, and I'm joined live by Jim Cramer. Jim, how is Action Alerts Plus going to approach this market today?
Well, look, I think that this is a market that wants tech to go down again. This is a market that wants the industrials and cyclicals to go up. It's a market that is trying to choose which of the retailers is stronger than not. It is not a market that says, listen, you got to go out and you got to buy Broadcom, which is doing okay, or you got to go buy some, a stock like Enlock, which never seems to go up and is starting to really piss people off. But I'm urging patience.
Jim, 12 million Americans could lose unemployment aid by the day after Christmas, December 26th, due to deadlines that Congress had in its CARES Acts. How much of a negative impact could this have on the overall economy?
Well, look, this is just a foot race between the vaccine and jobs, and the jobs are going to be lost because the vaccine's not going to be there fast enough. Now, if you're Washington, why would you care? Okay, I mean, you wouldn't really care. You've already picked a president, although I don't think the president's going to leave the White House as easily as people think. You can blame the other side for people who've lost jobs because you're probably already thinking about 2022, and that is just the way it is. I mean, I think that we are seeing the naked, craven level of politics that has descended upon Washington, that they are not helping these people who are losing their jobs through no fault of their own.
You mentioned the vaccine. So one thing investors might try to do right now is balance their stay-at-home stocks with a reopening portfolio. So how can they balance these two different plays?
But that's been our hallmark the whole time. Remember, we've been saying use a barbell, and that's what Action Alerts has done. So, I mean, I think that people should subscribe and look at what we've done because it's been the absolute perfect barbell as far as I'm concerned. And when you get things like Boeing, and Boeing's going to be down soon because Boeing, the smart money is saying, "Hey, listen, we knew this was going to come, but then it'll bounce." I mean, we put a lot of the Boeings in there, and we did cut out some Pepsis, and we did cut out some um, weaker drug stocks, but we kept the AbbVie. Let's see, AbbVie's up nicely, and we kept Bristol-Myers, which is stuck here. But we mostly have been trying to get the Honeywells and the DuPonts. DuPont has been just a standout, and of course kept Disney, which was very important. And again, Boeing was ideal, so we're doing okay.
And if you haven't already, you can head on over to actionalertsplus.com to sign up. Jim, this morning you were speaking a lot about JP Morgan CEO Jamie Dimon and his comments on a peaceful transition. Do you have advice
Right.
for investors preparing for a potential volatility around the transition of power, which you just said could be an issue?
Well, I mean, I think that this market understands what a buying opportunity is, and a buying opportunity is when people panic over the president refusing to leave the White House. Because what does it mean? I mean, it means that the worst that happens is going to be another government located somewhere else. And the president's government won't have anybody reporting to it because they're all sworn to the United States. And to be sworn to the United States means to respond to the president who's being sworn in. So, I mean, I don't know. I do think that it's a little difficult to predict what will happen. You have to believe that someone's going to get to it and say, listen, you're not the president anymore. But I see tremendous number of cowards, and nobody wants to say it to him. So I decided to stick it to him because if they're not willing to say it, I'll say it. I mean, he lost fair and square. There was no Dominion 4 million votes here and 600,000 votes there. That's just completely unproven. And the person who has been very good with the Department of Homeland Security was fired yesterday. This is not the behavior of a person who knows that there's a smoking gun.
Jim, I want to talk about COVID-19 tests because we actually got yesterday the FDA's approval of the first COVID-19 at-home test from Lucira with a
Right.
prescription from your healthcare provider. But with cases surging, I think that a question to be asked is this going to be helpful to get people out and about safely, or is this really just to help potentially curb the spread?
Well, I think it's to help everybody. I mean, if it's for real, then I think that you will test yourself before you go to work. And everyone should be required to. I mean, I think that this is a possible real windfall. This, along with Pfizer and Moderna, could put an end to this thing. I mean, and that's really fantastic, given the fact that we weren't tough like some other places like China. We do have a fantastic contact trace system that is Microsoft's and I mean that is Google's and Apple's, but they never brought it out because people thought it was an invasion of privacy. It's too bad because that would have been the way to do the best contact tracing.
Pfizer is saying, speaking of COVID, Pfizer is saying that its vaccine is now 95% effective. Which vaccine would you consider getting, Moderna or Pfizer?
Well, now that Pfizer's 95, then I would get the Pfizer. I had been reluctant to go and think that you should go get the 90 versus 95 because there's actually that's a big percentage. And when you talk about 100 million people, that's a huge number of people. And I don't want to be one of those people. So I thought the Pfizer was less onerous and more rigorous than Moderna.
Let's talk about some retail names. First up is Target reporting earnings that beat analyst expectations. Is it a buy today, or do investors need to bide their time?
Well, Target's fabulous. Okay, Target's just a fabulous quarter. And the time to buy is now still. It's up 7. Doesn't matter. It probably could be up 12. You buy some now. It was really just an amazing quarter. We've been liking Target for a long time. We bought Costco, but Target is just phenomenal. They have great margins. They're doing a lot of good things. They've got Shipped, which is terrific. Their delivery system. And it is just a very well-run company under Brian Cornell.
And we've also got Boeing to talk about. I mean, Jim, you were right to be excited about Boeing earlier this week. So now Boeing 737 MAX.
We bought a ton of Boeing lower. This was one of our best hits for action alerts ever because it was immediately doubted. I mean, it was at 150, 160, 160. It traded down to 148, where I said, just buy some. Just buy some. And people were saying, well, you're an idiot. Which is, I like that. And next thing you know, it's at 213, and it's not done here. I mean, next thing you're going to hear about is big orders. It's going to be big orders. There's a demand for planes. So I like the stock. It's up $3 to 213. How about 220? How about 220? I think you can trade there.
So 220 is the time to buy if you haven't already?
No, right here, 213.
All right, there we go. Jim, Let's talk about Lowe's. So Lowe's was actually getting a little bit hit after the earnings fell short of expectations.
I'd buy Lowe's. I mean, Marvin Ellison is fixing the e-commerce. He had 30% comps. He's doing a lot of things right. It's only 17 times earnings. I have to have faith in him, and I think you buy it.
But would you choose Lowe's over Home Depot?
Oh, no, Home Depot's really amazing, and it didn't go up yesterday, and I thought it should have. It was a really good conference call.
And finally, Jim, we've got Apple. So Apple is cutting its App Store fees. Does this show that Apple listened to developers, or are they just caving to peer pressure?
Apple, this is like something that a lot of the companies are trying to do something for small business. Facebook is too, Shopify. This makes a lot of sense. A lot of small business people aren't making enough money in their apps, and suddenly they've got this windfall. When we started TheStreet, there were a bunch of CEOs who didn't want to pay the VIG of the 30%. They were all, a lot of them were just wrong. You could argue with them, but they were the CEOs, and it was better to be in the App Store. But there are always people who say the App Store charges too much. I think the App Store is volume, and in the end, I was very right, which is not bad.
All right, and if you want more insights from Jim Cramer, you're going to have to come with us over to Action Alerts Plus, where we have a members-only daily show. You're not going to want to miss it. As always, I'm Katherine Ross. Thank you for joining us today.